So just to back up, because again, so this is where the CPAs get involved too. But the capital gain originally you're getting hit from the sale of the crypto. So let's just say if you took up $1 million, you had, again, your tax bracket, you had to pay $400,000 in taxes. Right?
Yeah.
So that's what we're mitigating.
We're mitigating that on the front side.
On the front side,
yeah.
Okay.
The asset though.
Asset side, you're able to roll that through. Okay.
Okay.
So through a normal depreciating schedule.
Yeah.
Okay. Does that make sense, Hank?
Yes, it does.
Okay. So you're not going to pay any capital gains on that property if you keep it for 10 years in a day.
Got it.
Okay.
Okay.
And that's the goal. Now, again, so we don't want to get into details.
If that property's worth $5 million, if I choose to sell that property after 10 years, you're saying I do not have to take that capital gains hit on that entire piece of real estate.
Exactly.
Got it.
Yeah.
Okay.
And again, too, you want to talk.
We have to have CPAs.
Exactly.
Sometimes attorneys get involved. Sometimes stuff gets complicated, and there are specialists for those things.
Exactly.
Got it.
Now, again, so there are exit strategies if you sell in 6 years because, again, life happens, you get into a divorce, you just need to sell. There is a bracket of what you would pay. I don't know that detail right now, but it could be like 12%, 18%, 20%, or whatever that is. So you can exit it. And I guess it's not a penalty, but you're going to have to pay some tax, okay?
Got it. So the money's tied up, but you could exit, and does it go down year over year, like the amount of the capital gain percentage you would have to pay?
Yes.
The closer you get to 10?
Exactly. It's closer you get to 10.
Okay.
Now, the way that we're involved in it, we're keeping it for 10 years in a day. And the reason why is we look at it at you can then refinance, after year 2, year 3, and pull some cash out, and then take that cash and go do whatever you want. That's going to be tax free, just like you do a regular refinance.
Interesting. Okay. So as the tier continues to increase, let's say, again, for the sake of this exercise, it's $1 million. But after year 5, you have 200 that is cleared or passed go. Could you then take out that 200?
Yes.
And invest that 200 to start making returns on that capital? Is that what you're saying?
Yes.
Interesting.
Yeah.
This is new information for me, man.
Yeah.
It's awesome.
Yeah. And to get to it, right now, what exists is mostly funds, right? And so it's usually the big guys that are doing this. There's a lot of tax strategies out there that do know how to operate on the self-directed side, but just people are not talking about it. And so, again, real estate is, there's so many different avenues to get into it, but we kind of like this space right now. There's not a lot of competition.
I love it, bro.